Thank you for joining us today. The session is on the 26-27 financial aid changes and what they might mean for UC students. I'm pleased to introduce today's presenters. We have Dave Peterson, Associate Vice Provost for Student Financial Aid and Enrollment Services, Lysandra Craig, Director of Student Financial Aid, and then myself, Martha Geiger, Director of Enrollment Services. Before we begin, a few housekeeping items. Microphones and videos are turned off, suppressed for our attendees. If you have questions during the presentation, please post them in the Q&A. You can submit questions by clicking on the Q&A button at the bottom of your Zoom window. Type your questions there, submit them at any time, and we will do our quickest, our best to get those answered. The webinar is being recorded, and we will post that recording on our website with OBBBA impacts. As a side note, that webpage is actually a great resource. It's a good place for you to find answers and the most up-to-date information. We are still receiving guidance as things evolve, even though we're past July 1. So we encourage you to take a look at that regularly. With that, I am going to turn it over to Dave Peterson. He's going to do the presentation, and welcome. Dave, you're on.
Thanks. Yeah, no, I know. I was just giving a dramatic pause there, Martha. Thank you, though. Good evening, everyone. Thank you for joining us. My name again, Dave Peterson. I have the privilege of working with Martha and Lysandra on a daily basis. What we're trying to do here with these sessions is really just make sure everyone is aware, because there is a lot of press out there right now. And you probably have, if you have children going to other schools or have friends with children going to other schools, you've heard some of the challenges that are happening with federal financial aid, specifically because of the One Big Beautiful Bill Act. One Big Beautiful Bill was passed into law, and it actually became effective on July 1st. And there are some significant changes to federal financial aid because of it. I will say that those changes, probably the biggest challenges institutions, and not just UC, but all higher education institutions are having, is it's July 15th. We want to start getting awards and financial aid out to students by August 15th, basically. And we still haven't gotten all the guidance we need from our friends at the Department of Education at the federal level. So again, this is something that's impacting all universities. We do have changes in federal financial aid and state financial aid on an annual basis, but generally not to this large degree. The degree of this change, I've worked in higher ed for a little bit over 30 years. I know I started as a baby, but a little over 30 years I've worked in higher ed, and we've never experienced the amount of change that we are experiencing this year ever before. So it's really pretty impactful. A couple things I want to be very clear on, though. The good news is students are still going to receive financial aid. The FAFSA, the free application for federal student aid, isn't going away. Pell Grants aren't going away. Any student loans are going to continue to exist. There's adjustments to some of those items, but they're not going away. So we're going to kind of talk about some of those changes today and hopefully address your questions. I do want to leave a lot of time at the end for questions, because I do feel like that is where you honestly get the best information, and you can kind of voice, quite honestly, what your concerns are, and it helps us for us to shape the FAQs that are on our websites. So without further ado, I'm going to go ahead. The one thing I do want to point out, because I'm going to hammer this on every slide, we communicate with your students, or with you as students, because I know we've got parents here, we've got students, undergraduate students, we even have graduate students and professional students here. We communicate from the Student Financial Aid Enrollment Services areas with the students by the students' email. And so I want to strongly suggest that your students or that if you are a student, you check that email on a regular basis, especially this year. With all these changes, we quite honestly fully expect that there may be changes that come after we've released federal financial aid, and we may have to make adjustments after the fact. We want to notify you of that as soon as possible, though. So I really want to stress throughout this to check your email on this for more information from us. It's going to be key to keep you on top of things as we go forward. So with that, let's move to slide 2. And yes, I have my slides over here. And yep, okay. So again, talking about what this presentation is going to be covering here today. I just want to make sure you have an idea of what it is we're talking about. Specifically, when we're talking undergraduate students, we're primarily talking about the two biggest things there are Pell Grants and something that we call enrollment intensity. And we're going to talk about that as we start going through this conversation. When we start talking about graduate students, the biggest change there is all student loan borrowing. There's some of that with the undergrad students as well with the Parent Plus loan, but it's largely on the graduate student side that there's some huge changes. And then we're going to also talk a little bit about some of the overall changes that are impacting everyone and some of the repayment options. Again, I know that not all of you are incoming freshmen or even incoming graduate students. We are going to have some graduate students and seniors on this call because they've heard about One Big Beautiful Bill. And so talking about the repayment methods and measures that are going to be in place is definitely something we want to at least touch on and give you some direction on where to go for more information. So I do want to say one of the key points of this One Big Beautiful Bill is it more closely ties together financial aid with enrollment, academic performance, timing of enrollment and academic performance, and really return on investment. So there's a lot of aspects of this that I'm going to talk about, but the strongest thing is what we had before has actually gotten stronger. The connection between enrollment and aid has really been strengthened. There's some good to that, but there's also some challenges because the flexibility that students have demonstrated in the past with their ability to withdraw from courses, change courses, has really substantially changed. And I want to make sure you're aware of that. So let's move on to slide 3. And luckily, there's only 15 slides. Those of you that know me, if it was up to me, there'd be like 6 slides because I'm much better at rambling. But I do think this is important for you to be able to see some of it. So let's talk a little bit about the FAFSA form itself, again, free application for federal student aid and grant eligibility. Again, this is the one form for those of you that haven't maybe done this yet, because we do have students that haven't done it at this point. This is the one form that you use to qualify for grants, loans, federal work study, even some institutional and even external scholarships many times require you to complete this. So I want to make sure that the number one thing, if you haven't yet, you want to do this. For those of you that have done a FAFSA form, but you haven't really seen or heard anything yet, because of the problems of One Big Beautiful Bill, we have been unable to draw in, meaning download from the federal government, your completed FAFSA until, quite honestly, just Monday morning. Sunday night, Monday morning is when it really kind of happened. We have gotten undergraduate students who filled out those FAFSA forms between, and let me step back because I think I skipped over the time, from April 24th, sorry, this way, April 24th till July, whatever that Monday was, the 12th, 13th. In that time period, we were unable to draw down the free application for federal student aid for any students for 26-27. We've now been able to draw those down. We did that on Monday morning, Sunday night, Monday morning. We've now completed packaging for undergraduate students who were in that group. We are still in the process of getting graduate students and professional students packaged, but we do have your FAFSA information, and you should be able to see that out in our Catalyst system now if you go out there and look. So that's the most important thing for you to know at this point. Um, the changes that have happened, and we're going to go to that real quick because I think it's on the next slide. Yeah. So a couple different things that have really happened here. Probably the biggest one, family business owners have been adjusted for a little bit with the new FAFSA form. Same thing with family farms. So those adjustments in general are more reflective of what families in those situations have to bring to the table for their educational costs. Remember the free application for federal student aid, it tries to create something called a student aid index. That's not necessarily, and I know a lot of times people think of it as that's how much I have to pay towards college. That's not what it is. The student aid index is literally a way of measuring you. So if Martha and I, because I see Martha's face on the screen, if Martha and I go in and I have a student aid index of 26,000 and Martha's got a student aid index of 21,000, she is going to be considered and has a possibility of getting more of certain types of financial aid than I do. So it's just a way of basically us awarding, giving us guidelines for awarding. When it comes to federal and even state aid, we don't make those decisions. Those are made by the federal government. We are following that based on their guidance to us. When it comes to external scholarships, that an external scholarship provider is doing that. And when it comes to internal scholarships, we have a little bit more flexibility, but not a great deal, especially if there's a need component to it. So just to let you know where we're at. So again, those are the biggest changes to the FAFSA. Nothing really large, but it does make it more realistic for families that basically have their own businesses, family farms. Commercial fishing is another one, I think. I will be honest, I don't think we have a lot of families coming to the University of Cincinnati with commercial fishing, but if you are, I'm impressed and thank you for coming. So let's go ahead and move to the next one. Most students, just so you know, aren't going to see any kind of changes from that. Okay, we should be on slide 5. Let's talk about Pell. So Pell isn't, again, disappearing at all. The formulas are changing though. And because of that, some students are going to gain eligibility and some students will lose eligibility. The SAI, and we love acronyms in financial aid, and I apologize in advance for it. It's a simple way of doing things from our point of view. But that student aid index threshold has changed slightly, and because of that, that can change your Pell Grant eligibility up and down. This doesn't mean that you did anything wrong. I want to be very clear on that. A lot of times students, parents will call and they're like, oh my gosh, we lost Pell. What did I do incorrectly or whatever? It's not anything you did wrong. It's just the way the formula changes. And again, these small tweaks to the formula, they usually happen every year. So I encourage you to continue to, if you didn't qualify for aid this year, to continue applying in subsequent years. I know it's not always the funnest activity for you to do at night or when you're with your family, but I encourage you to do it on a regular basis, annually, not multiple times within the year, but on an annual basis. The aid process changes from year to year, and it's a good way to make sure you're still getting aid. Having said that, let's move on to slide 6. So borrowing and enrollment decisions. Okay, so historically, students treated enrollment decisions and financial decisions separately. And this is where we get into that connection. The One Big Beautiful Bill Act really moves us closer to treating them as one conversation. And this is huge because for any of you that are continuing students or have had children go to school before, in many instances, what happens is the academic advisement piece operates with the concept of, I'm going to recommend to the student the best thing for them from an academic standpoint. The financial aid piece, though, now is interconnected in that to a much greater degree. And so what that means is what can be the best decision from an academic standpoint may not be the best decision from a financial standpoint. And so when you're making decisions about withdrawing or adjusting your academic schedule, changing your courses, especially once aid has been released, I strongly recommend that you contact Enrollment Services, that they will be able to hopefully give you some good guidance on what that change is going to do to your financial aid package as you're moving forward. So again, enrollment decisions, it's a really big deal now, and I just can't stress enough. Please contact Enrollment Services if you're making any kind of changes in that way. So let's go to undergraduate loans because this is what I want to kind of talk about. Unsubsidized and subsidized loans are not going away. Now, I know the first thing someone's asking is what's the difference? Subsidized loan is where the federal government pays the interest for you or for your student while they're in school as at least a half-time student. Unsubsidized loan is where they have to either pay the interest or allow that interest to capitalize. And just because I know we always get this question, if you're going to make payments on the interest, the student will get notification on that, and they usually get it on a quarterly basis. So it'll take them a little bit of time, but they will get that statement if they want to make those payments. If not, they can allow it to capitalize. I will use myself as an example. As a student, I really thought it was more important for me to be able to order pizza, let's say, instead of paying the interest on my student loans. And eventually, by the time I graduated, that raised my student loan debt. What I ended up starting making payments on was actually about $2,500 more than what I had actually taken out in student loans. Not hugely substantial, probably not different than many people's credit cards in some instances. If you someone who lets your interest accumulate on a credit card, but at the same time, that's a pretty big expense when you're first graduating and you don't, have a job right away, or the job you have isn't quite paying what, you were hoping it would. So I encourage, if you can afford to pay the interest while you're in school. But again, you do not have to on an unsubsidized loan. You can allow that to capitalize. What you need to know, though, is the changes here. And that is, before, you used to be able to take out student loans as long as you had room under your cost of attendance. Now, student loans are restricted by the number of credit hours you're enrolled in. So if you are a half-time student, meaning you signed up for only 6 credit hours, you are not going to be able to get the full amount of student loan. You are going to get a prorated, if you will, amount. And that's a big change. Before, we had students who would go part-time. And I will be honest, I was one of them. I went for my MBA part-time and I took out full loans. You're not going to be able to do that anymore. Students now are going to only be able to take out, if you've only registered for half-time enrollment, then your loan amount is going to be half of a full-time loan amount for that fall semester. Again, that's a big change. And again, that's that strengthening that connection between enrollment and the borrowing limitations. Again, as the slide says, make sure you check with Enrollment Services as you're moving forward. Let's go to the next one, graduate professional. And I guess I jumped ahead when I gave myself as an example, but it's the same kind of things here as far as the changes in enrollment. What's new is graduate plus loans have gone away. So for those of you that for those of you that have had Graduate Plus loans before or heard about them, Graduate Plus loans were available that would actually help the difference between your costs, your educational costs, and what you have in student loans. Because sometimes student loans weren't enough. Those have gone away. And what that means is if you're wanting to take out more than your normal loan amount, which for graduate students is $20,500, you're now going to have to probably look at the private loan market. We do have on our website information about private loans. But remember, I want to be very clear on this. The university cannot give you specific recommendations. There was a lawsuit a few years ago, not with the University of Cincinnati, but at a national level. And we are limited, so we can't tell you to go with XYZ credit union over ABC Bank. What we have to do is make all lenders available to you, which is what we do on our website. And you have to go through that process of evaluating them on your own. I know that's not what you wanted to hear. I know you're probably looking for some guidance on that. I know enrollment services get a lot of questions on that, but unfortunately, we can't give you specific guidance on that. So just wanted to make sure you were aware of that. At the undergraduate level, plus loans have been capped as well. And more importantly, you now can only receive plus loans, or excuse me, let me jump ahead. I'm getting ahead of my slides. You can only get plus loans up to a maximum of $65,000 for the undergraduate career. So if you take out 20,000 in freshman year, 20,000 sophomore, junior year, you've now used 60,000. That means going into your senior year, you would only have $5,000 in plus loan availability left for you. This is a new change. It's going to cause us to have to really think a little bit more instead of just accepting that total amount. We now have to kind of think about, well, should I take 15,000 for over the 4-year period, for instance, to make it stretch. So again, it requires a little bit more decision making on the part of families, and I wanted to make sure you're aware of that. Again, we kind of talked about this, the difference between full-time and part-time. The important thing to remember here is this could impact your aid even if you withdrew during the middle of the semester. Depending on where you're at with the loan process, it could affect your aid. So again, it's really important that you contact our friends in enrollment services. Okay, let's go through one more. So this is one I want to make sure we kind of talk about to kind of give you an idea. This is an example of an undergraduate freshman student who signs up for 12 credit hours in the fall. For 12 credit hours, the freshman loan amount is $5,500. That's the maximum by law. We would normally award them, since they're 12 hours, they're a full-time student, we would give them $2,750. So they would get 50% of that $5,500, $2,750, no problem. Let's say at that point they drop down to 9 credit hours. Now the loans have already been dispersed. So we're not going to go out and tell you to pay back part of that loan then. What we have to do, though, is if that student only signs up for 12 hours in the spring, they can only complete 21 out of the 24 hours, which is considered full-time enrollment here, in the year. So we cannot award a full-time award in the spring term. We have to award. So even if they're in 12 hours, we have to award based on 9 hours because they can't get to the 24. So we basically do the 21 of 24, 87.5%, and we go ahead and make that adjustment. Just because I know we're going to get the question, what if I take 15 hours in the spring? If you took 15 in the hours in the spring, you would then be 24 out of 24, and you would be able to get that. My question or my concern for you is, if you were a student who only completed 9 out of 12 in the fall, academically, there's probably a recommendation that you not take 15 in the spring. So again, this is back to that conversation I said where academic and enrollment or in financial didn't always used to match. Now they're more closely intertwined. So it's going to be a conversation that you're going to have to really think about. Making a decision like withdrawing from one course can have a larger implication. And then how do you go about rectifying for that or planning for that from a financial standpoint? Let me give you, I think I've got, oh, we're going to go right into repayment. Sorry, I thought I might have had another slide on that. And I know I'm getting close to the end, so I need to probably speed this up a little bit. Let's talk a little bit about repayment. Um, one thing I want to point out, this was an area that really needed some change. We at one point had, I want to say, 14 or 15 different repayment methods that a student could go into, different types of repayment plans. That has been cut down to 3. It makes it easier. At some point, there was way too many decisions to be made, and the differences were very slight between those. We're down to 3. But the difference is the 3 plans we have now are much more restrictive as far as repayment than they were before. So I bring this up because if you're a family that, again, depending on what you're trying to do with your career after you graduate, decisions that many students would have made in the past to maybe take a lower paying job, or a job where they would be able to take advantage of things like, I don't know, some low income, working in low income areas and not taking as high a salary. For instance, teaching, I know, offers this. You're not going to have the same kind of flexibility that you had before with loan repayment. So it puts an emphasis on and a premium on your earnings when you graduate. So I want to make sure you're aware of this. Start thinking about it now. One of the beautiful things about the University of Cincinnati, and I truly believe this, is our cooperative education. We give opportunities career-wise that other institutions just don't do. Having said that, start considering that even when you're looking at co-op, that you're going to have limitations. If you're someone taking out a lot of student loans, and make sure you make smart decisions on your co-op rotations as well. Because again, that's going to lead directly to what your career opportunities are going to be when you graduate. You can find more information on these because I don't want to get into the details and get us bogged down. We only have so much time. Online on the federal government's website, you can look up the student loan repayments and it's going to give it to you step by step what each one is. I encourage you to look at it. You don't have to memorize it unless you have trouble going to sleep at night. I wouldn't do it too late. But at the same time, I think it helps paint a picture for you and again, reinforces what you need to be doing with those co-op rotations. Oh, and I do have actually one slide on it, the income-based repayment. So again, this is changing. You can, as I mentioned before, the studentaid.gov website is where you want to go to on this. I don't think I specifically said it, but there it is. You can go to this and you can actually plug in some information and test out what those different repayment methods will do for you when it comes time to graduate. So again, I strongly encourage you to do that. So next one, where can we get answers? We've got a page on our website, meaning the UC website, that is the One Big Beautiful Bill Act, or OBBBA, that gives you the most up-to-date information that we have as an institution. I will tell you that we are still in the dark for a lot of this. The details, that the way we go about doing some things that we've done in the past that have been standard have now changed, and we are still waiting on some details. We think we're going to probably receive those. I'm hopeful that we receive them before September is over, but it's possible that it could go longer. So again, that website is your best and most up-to-date information, and it is University of Cincinnati specific as well. We've got frequently asked questions on there. We've got general information that we've, shared, but based on your questions that you've come in and immediate things that have just recently changed. So again, it's a good website for you to pay attention to. You can also go to the federal government, studentaid.gov. There's going to be information out there as well. That's going to be a little bit more generic, and honestly, that may be a little bit more confusing than not. When you go through both those pages, if you find information that you're unsure of or you're not comfortable with, your first step, and I want to again emphasize this, is to the enrollment services area, and that's Martha's area. That's who you're going to want to contact to ask these kind of questions to. They will have access to your specific information, and they will be able to hopefully give you the best guidance based on the best guidance we've received at that point. Just a student action plan for those of you that haven't. I wanted to go through this with you. Number one, if you haven't done the FAFSA yet, do the FAFSA. If you've done the FAFSA and haven't gotten an award letter yet, start paying attention to that. Our plan is to try getting award notifications out here within the next couple days. If you're an undergraduate student and you see that, you should be able to see that information on there. Billing information should be going out here on July 24th is what I believe the schedule is for that. Martha, Lysandra, am I wrong with that? I believe it's July 24th. Does that sound right?
For
Did I
bills,
stump you? Yes.
I was trying to respond to
there,
a question.
yeah, bills, we're expecting bills to go out end of next week.
Yes.
That's an estimate. When bills start processing, that's when they will start. They will process throughout the weekend. So
Okay. Thanks.
your student will get an email indicating that the bill is ready.
Absolutely. So you'll have bills. The age should be on your bill. If it's not, definitely want to reach out to us and we can try finding out why. The only reason initially I would say that aid isn't on there is if you're not enrolled full-time and you have aid programs that require full-time, depending on what those aid programs are, they may not be on the bill at that point. But again, if you have questions, please contact Enrollment Services and they can hopefully talk you through that process. Along those same lines, planning your enrollment. I can tell you that if we start trying to release financial aid, and we start doing that 10 days before the start of the semester, and usually students start seeing their disbursements 7 days to the start of the semester. So if you have, you take out that 20,500 in plus loan and your tuition, only eats up 15,000 of it, we would end up refunding basically $2,500 in the fall and $2,500 in the spring. When we go to do that, we're looking at your enrollment. If you're changing hours up and down at that point, that is going to stop us from being able to disperse funds. So, big thing I would recommend to all of you is to get yourself enrolled as accurately as possible, as soon as possible. We again start doing this 10 days before the start of the semester, with disbursements going out by day 7, or 7 days before. So we really need you to be registered properly at that before that happens for us to be able to get those disbursements out. So I cannot emphasize that enough for our families and students. Again, finally, borrow carefully. Again, the federal government put some of these restrictions in because what they saw were families were getting in over their head, taking out too much in loan debt, and not being able to pay it back. Some of them, again, are beneficial. Some of them are going to be somewhat restrictive, and it's going to cause you to have to look at other options potentially before your son or daughter graduates, or as a grad student before you come time to graduate. You've got to be really deliberate now. You can't do what has happened in the past, which is usually just accepting the full amount of loans. You've got to go through and really figure out, based on my bill, how much do I actually need and how much will be available. And again, I feel bad because Martha's area gets a lot of phone calls at this time of year. But if you have those questions, please reach out to Enrollment Services and they should be able to hopefully talk you through it step by step. I will say if you're contacting enrollment services, email's probably an easier way of reaching them than phone calls. I bring this up because last year during the month of August, I want to say enrollment services received over 25,000 phone calls in that month. So a fairly high volume. And because it works great for us as working professionals, many of us call during our lunch hours. Their lunch hour time frame is usually their busiest time of day to make a phone call to them. So I strongly encourage emails. It'll give you a written documentation of what's going on so you don't forget whatever was told to you over the phone. This is the link to our One Big Beautiful Bill Act webpage. If you want to scan that QR code, it'll take you to it. And again, that is the most up-to-date information that we have that we can share with students. We also, I will say, we will post things here, but we will also send it by email. So again, make sure your students, or make sure you as students are checking your emails on a regular basis for that kind of information. So at this point, that ends the slide presentation. I'm hopeful that Lysandra and Martha I know you guys have been diligently answering some questions in the chat, but if you have any you want me to address, please bring them up and I can try doing that.
Dave, there's a few questions out there related to co-op. Just maybe touch on that again.
Yep. Yeah,
You know, how does
that's
that
a
work?
big one. Yeah, that's a big one for us. So the reason the question is being asked is if those of you that potentially don't know about this yet, many students when they sign up for co-op experiences, they're signing up for 1 credit hour or even depending on the major, a couple of them are 0 credit hours. What we have in the system, we have coded those and gotten approval to code those as full-time enrollment. So even though you're only registered for 1 credit hour, you are enrolled in the equivalency of 12 credit hours. So you will be treated as a full-time student for that. Now, it does make completing that co-op really, really important because if you don't complete the co-op, you go from 12 hours to 0 hours or 1 credit hour, which basically makes you ineligible for student loans. So I bring that up because you want to make sure your cooperative education experience, your coursework, you can do whatever it is because again, some academic colleges require a little bit of coursework with that. Some it's a straight professional experience. Whatever you have to do, make sure you do it so that you get successful completion of that. And then again, that would benefit you. You would be considered a full-time student. So I hope that answers the question. Anything else, Martha or Lysandra?
I'm actually answering some questions out here about the bill, and I just answered one about what would be on the bill. And just in case there's some more, I'm going to throw this out there. So
Please.
when bills go live, when bills are available next week, any students that have a housing assignment, that should be on their bill. If your student or you, the student, have obtained a parking permit, that should also be on your bill. What I think is still in flux is whether or not estimated aid will be on the bill. So I don't know if I need to kick that to Lysandra and Dave on where we stand on all that, but I will say if it's not on the bill, the student's financial aid award and eligibility will still be in the Bearcat portal. So the aid doesn't disappear. But since we can't start posting aid, actually posting it to the bill until 10 days prior to the term, we could potentially list some estimates, but that does it's an estimate. I'm gonna hang on that word for just a moment. It's an estimate. And just know that could slide depending on any changes with any enrollment or anything like that. So I just saw a couple questions related to that out there. Dave Lasson, if there's anything that needs to be added to that, feel free.
I will address that a little bit so that, yeah, just so everyone knows, the federal government doesn't allow us to actually post aid against the bill until 10 days before the start of the semester. That's why I mentioned earlier 10 days and 7. What we have done in the past traditionally is have estimated aid included on the bill. And we want that because for those of you that are planning on doing payment plans, that needs to be on there for you to be able to set up the payment plan properly. We are, for the most part, I would probably say 75, 80% of the students are going to have estimated aid on their bills. There are some subsets of students right now, because of all these changes, that are not going to have their aid or may not have their aid on their bills. We're trying to work on getting it fixed. We're working with the Department of Education and with our software providers trying to get that fixed. But right now, there is a large problem with the Department of Education where students who are, how should I say, legacy students, grandfathered in. So some of these loan provisions we talked about, if you're a continuing student and you've been taking loans each year, you're grandfathered in or legacy. One of the problems we're having is that technically the Department of Ed's the one who we can tell your legacy, but if the Department of Ed doesn't have you coded that way, there's some restrictions on what we can do. And so that communication piece between us and them is presenting somewhat of a challenge right now. Again, undergraduate students, I'm thinking we should be able to hopefully get that resolved. Graduate students are actually where I have a bigger concern at this point. But again, if that happens, I want to reiterate that we understand that it's beyond your control, and we will work with you individually as much as we can to keep you enrolled as long as we can determine, because again, we can determine it. We just can't necessarily get things processed through the Department of Education in an expedient manner. We would be able to assist you individually to try to make arrangements there. So I hope that makes sense. Do you think that clarified a little bit, Martha, or did I just stir up a bunch more questions?
No, I think you're good.
Okay.
So I'm seeing we have like 30 questions out here.
Okay.
So I think I'm just gonna maybe start reading some off.
Please.
So there's a question here from Lisa that just says that so the student loan should come first and the parent loan covers the gap. It's actually the opposite of that in terms of how we apply it to the bill. So if a parent borrows a Parent Plus loan, that loan is going to be applied to the bill first. And then the student loan applied after the fact. For eligibility, we're always going to look at the student's eligibility first because it is the better, it's the better of the options, if you will. And that's actually why it's posted the other way as well. So I think that answers that one.
Yeah, can I touch on? So
Please do.
There are some families that choose not to do any student loans. They don't want their students to have loans. So they'll take out plus, and that's how they'll subsidize it and then make payment plan for the rest. There are families that want the students to take out their loan amount and then they'll pay do the difference. It's, we can't tell you what's best for your family and what you're trying to accomplish, but what Martha just told you is exactly how it applies on the bill. So if there's no plus loan there, then the student loans would apply against the bill amount first. Then when the plus loan comes in, that would actually, in a sense, replace the student loans and potentially generate a refund of the student loans back to the student. Did I say that right, Martha? The way I phrased that? I know it's wordy, but
Yeah, I think so. Yeah. And actually there's a on the parent loan question, there's a few more out there, and I think these are more procedural. One of the questions was, I think it was asking if we will notify parents that are out that could be eligible for a parent loan. We don't package parent loans just automatically. If a parent is interested in borrowing a parent loan, you need to go out to studentaid.gov and actually do the parent loan application. That information will be sent to us, and then we can continue the process from there, add any eligibility onto the student's award. But that is initiated by the parent. We don't automatically award Parent Plus loans on the initial student award. There's another question out here that just says on UC email. It's from Jenny. I'm not exactly sure what that's related to, but I will say we communicate with students through their UC email. That is the email address that we will use for communications. I'm just gonna say this. Some instructors might give students the opportunity to provide a different email address for academic and education, like coursework reasons. And I apologize if you can hear that. Sirens outside my window. That is strictly for that communications between that instructor and the student. That is not related to the official communications that come from the university. Those will go to the UC email. And that's really for that's really for privacy purposes. We have more control over the protection and privacy of that email address. We don't have that with a Gmail or a Yahoo or anything like that. So we're not likely to send information out to anything other than a UC email address. Let's see. I think, Dave, when you talked about co-op, do you pay tuition during co-op? I can't remember if you mentioned the co-op fee when you talked about aid posting for co-op.
Yes, there is a charge. It's not a tuition fee. It is a flat rate. And I believe it might have changed for this year, but I don't know it off the top of my head. But there is a charge for the co-op fee.
I see a number of questions out here that in some way, shape, or form are related to part-time versus full-time. What constitutes part-time and full-time? For undergraduate students, full-time is classified 12 credit hours or more. We have a flat rate fee for tuition that starts at 12 credit hours and goes to 18. So 12 to 18 credit hours, you're going to be charged the full-time fee. If you go over 18 credit hours, first of all, you need permission to do so. And assuming permission is granted and you're allowed to register for more than 18 hours, then you are charged tuition above the 18 hours at the per credit hour rate. So you're still getting the benefit of the full-time rate for the 12 to 18, and then anything over that, it starts adding again at the per credit hour rate. For graduate students, full-time starts at 10 credit hours. Most of our programs at the graduate level have a full-time flat rate. We have, I know of at least one. College of Business has a little bit of a different structure. They don't have that flat rate fee, but full-time is still 10 credit hours. So graduate is 10 credit hours, undergraduate is 12 credit hours.
And along those lines, then half-time enrollment for both would be 6 and 5, 6 credit hours for, so.
Yeah. And by default, anything under 12 for undergrad is going to be considered part-time. So a question, will financial aid amount change if awarded already? I think Dave addressed that, but yes, it could. There's many reasons that it could. So
yeah, your financial aid can always change. And that's not the university's decision. Trust me, we wish that we didn't have to monitor it up and down. But depending on the aid programs you have, yes, your financial aid package can very much change even mid-year, even a week, potentially 2 weeks before the end of the semester. That's why, again, it is so important to get yourself enrolled in the right classes right off the bat. And if you are going to have to make any kind of decisions, to check with enrollment services first. You need to make sure that, because if financial issues are going to be, becoming a bigger issue for you, it is when you make a decision purely on an academic standpoint, and it doesn't necessarily make sense from a financial one. So,
I have two more kind of large overarching areas that might touch on a few of these questions. FAFSAs, yes, FAFSAs have to be filed each year. I think that's been mentioned a couple times. Somebody had asked about changes. If you have errors on your FAFSA, you can go out to the website and correct anything that's on your FAFSA. If we have already awarded you and there's something that has changed, but it's not actually incorrect, that's a different scenario. And I would say, I would recommend connecting with enrollment services so that we can determine if there's a need for any kind of a change, or if it's just things change after you do your FAFSA. The FAFSA information is based on tax data from 2 years ago. So we know that there's some differences between 2 years ago and now. But there's only certain things that would actually facilitate a need to make the change. One is, I just completely put something wrong on my FAFSA and I need to correct it. So if that's the case, yes, you can go out and do that.
I will touch on that though. If you make those changes again, it moves the process back. So if
Yes.
if we're about to disperse aid and you decided that now it's, 3 people in college instead of 2, while eventually that may be beneficial for you, the fact of the matter is doing it right then means that disbursement isn't going to go out. And so be smart about what you're doing. And again, I definitely encourage you to talk to enrollment services before you make any of those kind of adjustments. We've had students in past years that, for whatever reason, have submitted within 1 year 12 to 15 FAFSAs in a year, and it made it very difficult for us to get their aid out, because at some point the federal government got nervous and selected them for verification because they didn't trust the information they were getting. So, again, things to think about. Sorry, Martha, I didn't mean to cut you off.
No, you didn't. I'm still seeing 41 questions, and I will say I have not been kind of ticking them off as I answer some questions. So I'll still be kind of popping through there to mark some things off. But in the last 5 minutes here, somebody had asked about parent loan versus private alternative loan, and how do you know what's the best option? There's no straight answer for that. It really depends on, what private loan product works for you and your credit availability and how that looks in terms of interest rates and things like that. The parent loan information is static. That's not going to be any different for anybody else. What I would recommend is on our website, on the financial aid website, and you can actually get to it from the enrollment services website as well. You have the ability to go out to something called Fast Choice, and you can actually compare private loans out there. You can compare multiple ones. You can kind of indicate what it is that you need, because they're not all the same product. In general, they're the same, but some of them pay past due balances. Some of them require that you maintain standards of progress. Some of them don't do those things. It just depends on what you need, and it does take it takes a little bit of work or time to look at that and see which one is going to work best for you. We already talked about the parent loan application. Students are listed on a parent loan. They're listed as the student. They're not responsible for the parent loan. They're not a co-borrower or an additional borrower, but that parent loan is associated to the student record. So I'm not quite sure, based on the question, if you were asking about them being a co-borrower or not. They are not a co-borrower, but they are listed on the application so we know which student that parent loan is to be applied. Federal loans are paid directly to the school. So when just like any grant aid, federal loans, and even private loans, when they're approved, those are sent to the school. We apply them to the bill, and then if there's any overage, that will be refunded. If there's not any overage, then of course it washes out, or there's still a balance, depends on the amount. But yes, all those funds come to the institution. We have to verify attendance and eligibility before we apply it to the bill. So that's how that process works. Oh, goodness. Lysandra, I'm doing all the talking. Do you see any in the last couple minutes?
I do want to say something about the private loans. One thing to pay attention to with the private lenders is, and this happens with the federal loans as well, you'll get a loan through XYZ credit union, for instance. There's a very strong possibility that they won't maintain that loan. They will actually sell that loan to a loan servicer. And in many cases, it could turn out to be Sallie Mae or some bigger company that we've heard of before. So I do want to make sure you're aware that and consider that potentially if you're going specifically with a local credit union, which I can completely understand why you would want to. In some instances, I would caution that will they be the person you're actually making payments to when this loan amount comes due? And so definitely double check that. Sorry, didn't know.
No, you're fine. And then the last one I'm going to grab is, and I've seen a couple that are kind of like this. If you've already done your 26-27 FAFSA, it's already done. You don't need to refile it now because of these changes. We just know what the changes are and we will implement as we have to. So if you've already done your 26-27 FAFSA, you don't need to do another one now. You will need to do another one when they come live. We're still hoping they go live October 1st for the 27-28 academic year. Right now we're focused on 26-27, but you don't need to do another one just because of all these changes. We are at 7 o'clock. We will continue to go through and make sure that these questions are answered. Again, there's a number of them. We've touched on a number of them live already. As Dave said, if you do have additional questions, don't hesitate to reach out to Enrollment Services. Our phones are not super busy right now. In 2 weeks, they will be. And I think he mentioned our busiest time really is between 10 and 2. It's when people start to go on lunch, take lunch, all those things. So earlier in the day and later in the day are the best times to call us. That number is 513-556-1000. We have in-person drop-in hours. We do not function on appointments. So you can come in anytime. Well, not anytime. You can come in Monday through Friday. We have 3 locations. We are on the Blue Ash campus, the Claremont campus, and the Clifton campus. Our drop-in hours start at 9 and we technically close them at 4. That does slide a little bit this time of year, depending on what kind of traffic we have. So we just need to be able to make sure we can get through all the people that are there at a reasonable time. Email is an option. Email is a better option if you just have a quick question we need to answer. If it is something that is going to be conversational, you ask something and it might have more depth to it and we need a conversation, I strongly encourage a phone call or a drop-in. We can do it in email, but it takes longer. And you might have multiple people answering your questions as they come in each time. So just keep that in mind with email. But all those are possible. We also have a chat bot on our website that's available 24/7. I think those are the ways. I can't think of anything else right off the top of my head. So we will continue to answer these questions. reach out to enrollment services if something goes unanswered or you have a very specific question that's specific to you where I have to, we would have to pull up a file. And I think that's what we have for today. Thank you.
Thank you, everybody.
All right. Welcome, everybody. Good evening.